Welcome back. The Toronto Regional Real Estate Board says higher interest rates continue to have an impact on the housing market.
The latest numbers from TREB found sales in June were down 41% from the same month last year. And the rest of the summer is expected to be relatively slow as well. So let's bring in Phil Soper right now, the president and CEO of Royal LePage, to talk more about this. Phil, great to have you here this afternoon. These numbers are pretty interesting. I mean, we realized the last couple of years were a bit unprecedented in the market, but a sales drop of 41% comparing month to month, year over year is interesting. Do you expect prices to follow?
Prices are following. They're still up year over year, but it's clear that prices peaked in their early spring or late winter, call it February, March.
Mm-hmm. And Phil, we've been talking about kind of the housing issue, and top of mind is always supply. Will this have any impact on the future of the supply of homes?
Unfortunately, no. And demand is building. Right now, what's happened is buyers are spooked. And so they've moved to the sidelines, particularly first-time buyers, with a wait-and-see attitude. And all that's doing is building up demand. We're not addressing the critical housing shortage we have in the nation, or in particular the GTA. So that demand, when it gets unleashed again, perhaps as early as the fall, we'll be talking next, at that time about uncomfortably high price increases again. So we must not take our eye off the housing supply shortage we have in this country.
So clearly interest rates and the increasing interest rates from the central bank, et cetera, moving on to the charter banks, is having an impact on the market, Phil. But, interest rates right now, we're looking at, 5% in some cases, maybe a little bit more for fixed year, 5-year fixed rate mortgages. I think you've been around real estate, so you've seen double-digit interest rates here, but we just got so used to cheap money. So what is the danger and concern here about the fact that we got so used to cheap money for so long, and that 5% seems like sort of an unbearable rate now?
Yeah, it's still, by historical norms, we're still in a low interest rate environment. My guess is it'll continue to rise to the low end of normal, if you use, say, the last 50 years as an example. But people have to adjust to this sort of thing. It's like this standoff between buyers and sellers we see right now, where sellers are saying, gosh, I want to sell my home because it's worth less. And the buyers are saying, I'm going to wait until I think prices are better. But the fact is, most sellers are also buyers. And they're going to get a deal on the buying side as well as the sell side. So unless you're a first-time buyer, it really is irrelevant. And interest rates are the same sort of thing. They are what they are. They're not going to be lower because they were at emergency lows. They're the same, and they're going to inch up a little higher. So people just have to build it into their calculations.
Right.
And Phil, what's the breakdown between, single detached homes and townhouses and condos? Are sales dropping in any particular area more so than the other?
Single-family homes are doing slightly less well compared to the condominium sector, whether it's townhouses or more standard apartment-style condominiums, partially because the overshooting, and that's what we had in the end of 2020 and for all of 2021. We had the market overshooting, breaking all historical records. It happened, it was focused on the single-family detached home. So the overshooting was more there, so the prices of condos relatively look even better than they did prior to the pandemic. And we're having non-permanent residents return. So, in Canada, any one normal year, we'd have up to 850,000, almost 1 million foreign students. They need a place to live. So that's supporting the condominium market, as is immigration.
Overall, Phil, when you look at the GTA market, because this is a place where so many people who are, coming to Canada and starting to live, sort of try to set up their first homes, et cetera, this still seems like a relatively stable market compared to perhaps, more outlying areas. Is that a fair assessment of Toronto and the GTA right now?
Yeah, again, in overshooting, the outlying areas where you tend to get more money, more house for bang for your buck, when people were able to work from home, work from anywhere, those were really attractive. But since then, gas prices have risen and people are coming back to the office. So the relative attractiveness of being in city cores, both in Toronto, but also in our big cities across the country, the legacy city cores are doing a little better. Again, we're talking about 3 or 4 percentage points better than the suburbs. Overall, though, interestingly, if you look at the 905, prices on a year-over-year basis are still they're higher than the 416 is compared to a year ago. So they're up in both cases, but they're up more in the 905 because it had that big overshooting.
Right.
All right, Phil Soper, President and CEO of Royal LePage. Thanks so much for the analysis and the breakdown.
Thank you, Phil.
Hey, my pleasure.